So thank you very much.
Thank you so very much, ma'am, for your presentation. I shall now introduce the next speaker, Mr. Sudhanshu Sharma. He holds a bachelor's degree in mechanical engineering and M.Tech in systems management. He is associated with various early stage startups as well as companies on the bubble. Presently associated with ICRA Online Limited, a group ICRA company, as module lead carbon rating, enabling the carbon markets in India gain transparency and facilitate its efficient growth with project evaluation, feasibility and risk analysis, and project portfolio ratings. He was involved in sustainability projects of renewable energy with RRB Energy Limited, formerly Vestas RRB Energy Limited, responsible for strategic planning and policy making for carbon advisory services of company, representing the project at various stages of overall CDM life cycle, starting from identification, development to client deliverables with maximum customer satisfaction. He has direct experience with real consulting, project coordination, collaboration, and business development. He was previously associated with Cantor CO2E India Private Limited, a London, UK-based company which is owned by Cantor, Fitzgerald and Mitsui, enormous business houses with global span, where he handled the tasks related to sustainability projects, carbon assess management services, business development, corporate planning and consulting. Today, his topic is buyers, identification, credit ratings and bankability. Mr. Sharma.
Thank you, Mansi. Good afternoon, everybody. First of all, I would like to clear the relationship between the Idea Carbon and the ICRA. Dinesh is from Idea Carbon, supposed to schedule here to speak on this. Idea Carbon and ICRA having a strategic alliance in India to promote the carbon ratings in the climate change divisions to give more transparency, certainty, efficiency in the carbon market. So Dinesh is supposed to speak here, but he left to London due to some urgent meetings. So I'm scheduled to speak here now. As the session goes, as a buyer identification, credit rating, bankability, I would like to just touch upon some points, as already the speakers have set the tune for the conference. I won't go into the details of that. I was trying to highlight some points and some other perspectives. Is the evolution of the market, and the market is evolving. I can see in the 4 aspects like carbon projects, programmatic CDM, sectoral carbon agreements, and policy-based carbon. It is the evolution still not reached on the some sort of maturity level. So what it needs a standardization, certainty, efficiency, and transparency into overall process. If I go through by evolution of the cycle of the carbon market, it increases on the 2 major scales. One is the scales in terms of the large scale projects, and second in terms of the complexity of the projects in terms of technology and financing. So you can see very beginning of the carbon projects having 3 aspects: diagnostics, benchmarking, and rating. And Idea Carbon very much involved in that rating aspect. Market again evolved into the programmatic CDM, in which major documentation is required, and it is exposed to the additional risk. Third part is sectoral carbon agreements, which is having 2 major parts because it's involvement of the countries into that. It may be a commercial and trade aspects, and second is sectorial expertise, which is also called for the technical expertise for particular sector. And last but not the least, which is the ongoing when the policy-based carbon, it requires the comprehensive analytical skills, which will give a clear picture in the skill set, and the functional complexity is also involved in that. So what the take-home message is that if you're going for a, if you see the carbon market, the buyers are in category, in the geography expanded. It's not like that standalone project you can find the buyers in numbers. But if you go for the programmatic CDM, you can just name the few. KFW is one of them. Handling big projects, specific requirements. I think Shantanu is also doing in the same lines. So when it's the standalone project, you can find the buyers. But when it requires specific requirements, you have to look into the specific buyers. As we all know that Annex 1, non-Annex 1, all the things are there. If you're hearing a music, listening to music, And if music is in a different direction, lyrics in different direction, and rhythm is different direction, composition is no more good. So the same happening with the market. It's pulling in different directions. If you take the example of the US, there is no cap and trade legislation 210, still thinking on that. European Union to confirm on possible restriction on CER post 2012. Australia is still, they're doing a lot of things, but it's not happening. It is beginning since long, but it's still in the process. Japan is already very much stated in the beginning of the talkings of the new mechanism. They will go for the bilateral tradings. And CDM itself, imbalanced stage, is very low movements from the ETA. So you can see clearly from the very first diagram of the left-hand side, from Annex 1 and non-Annex 1 countries having some mutual interest, in which US, EU, Japan, New Zealand, Canada, Australia, and other side is the India, China, Brazil, Mexico, South Africa. And if the second figure you can see on the right-hand side, every Annex 1 country having their own emission trading scheme, and they are correlated, to some extent to the CDM also. If you see the last part, CDM plus is signifying the CDM 2012. Maybe another mechanism will come, some reform of the CDM, the extension of the CDM, whatever it will be. So all the mechanisms are anyhow correlated with each other. And maybe the future is the red or the NEMA. We never know. The talks are going on. So what's the take-home message from it? Whatever be the outcome of the CANCOM of the other meetings will come, it won't affect the national domestic market to grow up. So it is one of the requirement of the market. If I jump upon the topic which is very relevant to the session, is the identification of the buyer. You can see the seller having the access majorly to the European Union or the Japanese buyers nowadays. Australian, some sort of buyers are coming, but it's very limited in numbers. So it is in the nature of compliance, traders, and project developers. If I talk about the Annex 1 governments, multilateral, bilateral, international financing institutes, they have a exhaustive credibility. They are working since long in the market. They have the historical credibility. But the only thing is the due diligence required for this type of agencies to deal with. A lot of documentation is required. And end of the day, the offers they are proposing in the market is not the competitive in the market. If I talk about the private sector, is the Annex 1 CDM project developers dominance are there. You can name some like EcoSec, NetSource, Tricorna, Cambo, Bunge, the name few. So they have the dominance in the market as per the buyer is concerned. Some utilities like Neon, Eon have the compliance in the European market, and they are directly going into the market, which is strategies they are following, and they're quite successful in that also. If you see the European secondary market players, they are entering into the primary market. Like if you can see earlier, there were no buyers coming into the China and India as such, but you can see now this, you may be unfamiliar with them, but it is happening that they have started the operations in the secondary market too, primary market too. If you identify a buyer, you just, as of now, we won't much bother about what the background they are having. They have made some default earlier, they have some breach of contracts maybe, so it is the less concern, but I think in future we have to look into when the more buyer comes into the picture. On the seller access side, the seller doesn't have much knowledge about the background of the buyer. They doesn't know what in what capacity they are working, what the institutional experience they are having. So it is one of the concern which is not felt so far, but I think in future it will be one of the relevant thing. What is the take-home lesson from that? One criteria is credible or rated buyer. You can say, I heard that Reliance only preferred the rated or the familiar buyer. They know that they are working in the geography. They have some certain track records. Or maybe the presence in India is one of the important thing. And last but not the end user of the CER. It may happen that somebody come and buy your CER and it can trade another market or in secondary sale. So the end result will get delayed and the payment get delayed in result. So it is an important aspect to take care into. If I go some hypothetical approach, if I see outside the ARPA, then I can consider the buyer on the following criteria maybe. The buyer may have the CDM expertise. That means that it is in their interest to see what the technicalities involved in the CDM project and what the risk implementation in terms of project execution part. Second is that they should have a potential long-term cooperation because the process is so long. It requires maybe 10 years, 21 years, and in the certain point of time. Then buyer from a CDM experienced host country. The DNA's role is very important to provide the check on the buyers. then buyers can mitigate the risk, the regulatory risk basically. If it happens sometimes there's no eligibility to be an aggregator to deliver in terms of the various projects, then it can do the secondary sales in the market with the eligible projects. And last but not the least, that a well-known established player like multilateral development banks, they may be instrumental to facilitating the debt and the maybe sales in the other market. But how we can check the credibility of the buyer? It's one of the biggest questions. So credibility of the lending institution buyer is available, and it is very much in the market. Agencies are used to provide that. But the happening is that it has some additional cost involved with that. So seller don't used to go to the for the credibility check of the buyer. They have some name in their books. They have some smell here and there checks, and they used to prefer that particular buyer. Especially what happened in US in recent time, when there is a credit debt obligation, then there is a high criticism of the rating agency in US. At that time also, the credibility part comes under the scanner, and it was not that much of the familiarity with the running market. And like independent agencies, one of the ICRA just got alliance with the Idea Carbon, are providing the ratings of the CDM project on the payment basis, and even they are providing, they are helping the developers to get payments against the ARPA for the registered projects. And one very important thing is happening now. The seller direct have a registry into EU registries, and they are very much having the account over there, and they are having direct transaction in the EU in the registered project, basically issued CER. But what will happen in the future? How the transaction may take place? It is one of the cases we can see that Indian banks and FIs are increasingly participating in funding based on the revenue registered projects. So but it requires a lot of due diligence. It requires a lot of credibility check from the buyer. It's very significant. Secondly, is the rating agencies in India now coming up and gearing up for the opinions on the registered projects and their performance. And Indian companies are coming with the programmatic CDM, CFL, big projects, which surely require a big due diligence and stringent process to go ahead with the buyers selection and identification. This is one of the things which is a lot of talked about. I won't go into the details of this chart. I just want to show you a picture that when the green bonds is talking, we are talking about the green bonds and its flow. You can see a lot of stakeholders are involved in that. And whenever the stakeholders are involved in that in different manner, it requires a lot of checks. It requires a lot of documentation. So what is the credibility of the stakeholders? It is also calls upon on the credibility check on the sellers, the credibility check of the stakeholders. And one of our team was discussing with the World Bank team, which is indicating that they will come up with the green bond in India also. Even they have allotted some fund, and they have some. They are in process to get some contracts in India too. So at that time, we can see we have to check up the credibility of the stakeholders in the big contracts. If I just briefly suggest you that what exactly green bond and how its financing is going on, it's very much clear from the picture that investor who is sending the principal amount to some credit enhancement agency, maybe a state government. It's a creditworthy counterparty which forward the same upfront payments to the project sponsor. And we develop the project, and it's sent to the regulatory authority for the due diligence and check as per the regulation. After that, they issue the carbon asset in terms of REC, ECERTs, CERs, and in the back, they issue the certificate in Conclave. It is the coupon form basically. So the project sponsor can repayment the loan, and after the same credit agency, they will check it, and they will pass the same coupon to the investor. So in that, investor interest is taken care of, and in which it is assured that after putting a money in a project, he will get a reasonable return on that. But rating, how it can help? It is one of the questions. So I just show you a small example here. Rating the green bond vehicle. This diagram is suggesting the dotted lines are basically a certificate receipt in maybe of the carbon asset, any of that, REC, ECERT, CERs maybe, and it will go through the credit enhancement process through the creditworthy counterparty. It will add the value into the project and do some monetary valuation in that, and then after rating or you can some risk assessment analysis, it will go to the investor in terms of the red arrows. So it will be also one of the significance where the interest of the investor is taken care of. if I just go through the last point, that if we do so, the likelihood, the volume and the timing of the delivery or the receipt of this carbon asset, not exactly in terms of the specific value of the figure, but if you compare, if somebody is inputting, giving inputs to the tool and it's PDD value or some documentation, you can see the significant difference in that. So it helps owner who can use a tool as a customized way. They can give their own inputs and they can see that what the assumption they're putting in and what the results they are getting into out of that. I'll just quickly wrap up in just 2 more slides are there. What exactly the carbon tool is doing, this carbon risk is doing, that it is just allowing the investor or the participants in the project for more specific to the project performance. It's a web-based tool, no installation is required. Application I just go through is portfolio risk management, is the characteristics of the project risk at every stage, volumetric, delivery, regulatory risk, every stage. Valuation, pricing and trade advisory it's also providing. It's giving you the investment loan selection even. If you're going for the renewable energy commitments, or if you're going for any climate change project, it can give you a process by which you can select the investment loan process, and giving you a negotiations also. In terms of that, you can see the common point between the buyer and the seller, and you can judge upon that. And how we build up this tool is the institutional experience from the carbon rating agency. We have seen the UNFC projects, IG's database, UNIPRISO, and also the codification of the CDM cycle. The carbon risk basically allowing the owner the 2 specific things. First is to structuring or guarantee the debt and equity and the performance of the project, and the view risk consistently, what the risk coming into the project while the development phase. Apart from CER, if you can see the other carbon assets like REC and ECERs maybe, and you can see we can also provide assessment of the systematic and the part of the project scheme, and we can see the participation of the regulator and their cost involved in that, and the value proposition to third party. What is summary? And we can summarize the 3 things from the reports. If you see the diagrams on the right hand side, you can find some of the graphs which is giving the confidence level to the seller that if he go for the project development, he has some confidence level in percentage. 5, 5, 5, 5 is maybe the steps. And he can use that percentage to gain the confidence into the project and show it to the buyer. So, and management format reporting, and you can compare the portfolios across that. And last but not least is an overall risk measurement throughout the carbon market. Last slide on the Idea Carbon, what exactly it's all about. Idea Carbon is a leader in climate financing, CDM, programmatic CDM, energy efficiency, structured financing. Idea Carbon and Carbon Rating Agency, which is extended off the arm of the Idea Carbon, is a leading expert into the carbon market, energy market. They have in-depth knowledge in tools and services providing to make the more transparent and the credible carbon market. And some key milestones are there. CR is launched by Lord in 2008, and we have a strategic alliance with the Bloomberg and the Reuters, and we have strategic alliance with the IDFC also. We have rated 115 projects till January 10. I will update this figure, it is gone through that. And Idea Carbon strategy with the ICRA, with the premium rating agency in India. And we are also providing our distributions to the market. Their environmental branch is called Market Eco. And Christiana Figure, who is right now is executive chair of the UNFCCC, earlier with the Carbon Rating Agency vice chair. So this is the institutional experience we have. And for further queries, you can contact either to Dinesh or I'm here to answer your queries. Thank you.
Thank you, sir. The last speaker of this session, Mr. Shantanu Kashyap, I shall introduce him briefly. He's a specialist on climate and energy at the Trade Council of the Ministry of Foreign Affairs of Denmark. He was primarily responsible for